Welcome back, and another week of talking technical. And South Africa is still in load shedding. And the strange thing with us, I don't know if you guys, when the load shedding is getting severe, the internet services disappear. So, yes, I know it's because of the batteries, but I can assure you, if it carries on like this, we all know that the economy is going to suffer, especially the local economy. I mean, our local market is driven by some massive big companies, diversifieds that trades around the world and do business around the world. But for the normal South African business, let's call it South African Inc., it is not that easy to do business. But let's kick off with the requests. First of all, Insimbi. I mean, someone is keen to buy the share, and I actually had a request from one of our subscribers to say, Frans, when is this share at last going to go up? Now, for me, it's quite simple. If I look at this line chart, there is definitely a resistance at 108, right? What will make you positive is this double bottom that's there. It tested that level of, let's call it a 99 cents twice. It bounced off there, but then it lost momentum again, tested 101, and it tried to get to 108 the other day. It couldn't breach that. But for me personally, although I like this double bottom that is in place, it's quite simple. It needs to get above 108 to make me excited. But on the other hand, to really get this share going, it actually needs to break this 111. So when you've got a company like this and you are keen that it must go up, the best always is just to be patient and wait. And remember, this is the 50-day moving average. I like to put that in for a share that consolidates or a share that is trending, because that gives me a good idea what the informed capital think about that share. Why? Because above that 50-day moving average, the medium-term investors are happy with the stock and they're keen on holding the stock. But unfortunately, when it starts to move below this 50-week moving average, then you know you need to just wait. So the answer on this question of this share is simply be patient. Well, let's have a look at Pepsico. I mean, that's that massive company in America that is the competition for Coca-Cola. And remember, this is a daily chart, but the viewer said that he's a long-term investor. So let's go to the weekly chart. And if I look at this weekly chart, it's simple that the share always trades around this moving average, but I just want to change that moving average to a 40-week because we're looking at a monthly chart, at a weekly chart. And what is the simple answer here? The simple answer here is that PepsiCo has the tendency to move for a while below this 40-week moving average. And the moment it breaches that, it stays above that for quite a while. So for the viewer that is looking at PepsiCo for the medium to the long term, I will say the following. First of all, I think the trend is still to the upside. There you are. You can see there's the trend line. Let's draw that in. Every time that the share comes close to this line, there you are. At this point in time, it will $166.85. The moment it gets to $166.85, we can easily see that it can bounce up again. But for me, either buy close to this line. If you do buy close to this line and it drops below that, that will be my stop loss. My stop loss will be 160.150. But if you are a little bit of a cautious investor, then above that line there, 173.10, that is the 40-week moving average. You can nibble on it and then use this as your stop loss, that support line. Then you play safe. But on the other hand, if you look at PepsiCo over the medium to the long term, and remember this is a weekly chart, look at this beautiful ascending channel where it's trading in. There you are. It goes up to the top. It tests that resistance line. It comes back. It went up all the way. It almost tested that line again. Came back all the way back. So maybe If it breaks above this 40-week moving average, it can maybe surprise us all the way to go up to $188. Chart looks nice. I think it's just a little bit of patience before you enter in it. But I must be honest with you, there's just something that I would like to show. Remember, an ascending channel like this, unfortunately, sometimes in future, it will turn into a negative formation. But that will only be below $166. While it is above that, nothing can go wrong. If it breaks below that, let's just give you the level in case something awkward happens to the company. Usually these soft drink companies, they are quite stable companies. They sit on usually a lot of cash. And if it does break that 166, we can maybe see this top company going down to 144.37 in time to come. Let's have a look at Pepkor. Well, that is now the local company. I like this company because their big market is what we call the grant market or the SASA market or the C income and even lower income market. So for me, look at the weekly chart here. Although I like the company, look at that rally. I mean, from September 2020, it rallied almost in a straight line up to 25.57 from below 10 Rand. What a beautiful rally. But unfortunately, now we see this is the 40-week moving average. Now, this 40-week moving average, of course, while the share is trading below that, you must remember that the long-term investor is negative on the share. They are nervous. They are not that positive. But for me, what worries me a little bit is the following. And the moment I draw that support line in, you guys will realize what I'm showing you here. And that is this head and shoulder formation on the weekly chart. What worries me even a little bit more is the following. There's the neckline, but look at this kiss, this negative goodbye kiss at the 40-week moving average. That tells me that the share went up. It tried to breach that level of 20 Rand and 80 cents to turn that into a support. And the moment it hit there on a weekly chart, it actually came back, and that made that a resistance. That is negative. So for me, where's the neckline? Let's just draw it in there, because I know a lot of viewers actually teach themselves on technical analysis watching this program. There's the neckline. And where is the support of that neckline? 19 Rand 60 cents. If Pepkor, and remember this is a top company, trades below 1960 and it starts to consolidate below there, we've got two options. It's either it's going to give us a conservative sell-off. And by the way, Pepkor mentioned the other day that load shedding is really troubling them. Some of them businesses lost a lot of business hours because of that. So the conservative target will be 1865. And if the head and shoulder formation play out in full, where can it take this company to? And I believe this is a top company. So if it gives you an opportunity to buy it, I think maybe you can look at him buying it. If it plays out to the full, it can take the share down to 16 Rand 70. But on the other hand, where will I turn positive again? If the share can move above that 40-week moving average, and that will be above 20 Rand and 80 cents. Let's have a look at Ellies. That was also a request. I've got a trader that actually wants to go into that and wants to buy the share. And look at this weekly chart here. This weekly chart tells me nice consolidation here at the lower levels. Let's draw in a resistance line to give the buyer a nice place where he can know that he's right by. The share can go to there. There you are. There's the resistance. Let's draw in the support line. All right, let's have a look there. Well, there's the consolidation, and that consolidation is between 14 cents and 16 cents. Now, the moment the share breaks above 16 cents, the first target will be 18 cents. But what's positive for me, look at this 40-week moving average. So this viewer wanted a trading opportunity. I actually think that Ellies can maybe surprise us into a little bit of a medium to a long-term trade. But, of course, buy above 16 cents, make use of a stop loss of 14 cents to protect your capital. And if it can consolidate above that 17 cents, this 40-week moving average, you can maybe on every higher low, you can add to your position and maybe look at that, because that looks positive to me. But first of all, remember, this is a consolidation. We all know by now that the consolidation must break from there, 16 cents, and only then it is a positive move. Let's have a look at Reinet. I mean, I like this company. It's a top company. It's a worldwide company. Weekly chart, it had one wonderful rally. I mean, can you believe it? From 264 in September 2022 all the way up to, let's call it 330 Rand in a matter of a few weeks. Now, while Ellies is showing us that it can maybe break up to the upside, unfortunately, Reinet is warning us, because it tells us, listen, I'm trading at the top end of where I've traded before, and what does it tell us? It must definitely break above 332.30 cents to give us another leg to the upside. But the unfortunate thing is, if it breaks below 327.20, we can see the share pull back all the way, and I'm going to give the levels 319.70, even maybe down to 313.30. And where's this 40-week moving average? Can you believe it? It only trades, well, it's waiting at 302.70. Just shows you this share had one enormous rally. Well, our time is out. Visit our website www.fransdeklerk.com for more info, and we will chat again.